Hey guys and gals, today is the 11th of February 2010. It is also the 42nd day of the month. And I'm going to talk about inflation, debt, dollar, those sort of things within this video. A lot of people over the last few months have been asking, well, when are we going to have this hyperinflation? When is it going to happen? And I think I can answer that one. That would be, let me guess, 1913 or about 97 years ago. That's when the Federal Reserve took over, and it only took about a decade or so for it to lose half of its value from the open. Back in 2008, before all of these crazy bailouts began, people were mentioning, oh, the dollar's lost 96% of its value since then. Well, obviously, they have been stating that over $1 trillion has been put in the system that's going to make it worse. And them saying that they put over $1 trillion into it is truth. But it's also truth for me saying that this video is over 1 minute long. Obviously, it's much more on both scenarios. And that's why I want to look at how much we have lost or how much the dollar has lost since then. I have to feel it's roughly between 98 and 99%. There are many mainstream analysts that are saying, well, will inflation become an issue? No, it's already an issue. The thing is, are you looking for massive, super aggressive hyperinflation? Even if that doesn't come, it's already at a severe rate the way it is, but massive severe inflation means that the loaf of bread is now $19. Heck, you could just have any wild prices. We've seen the food recently go up like 20, 30, 50, even 100%, depending on the kind of food that it is. So already on the current period, inflation is already here. And you're hearing so much about the dollar being a safe haven, especially and the difference is, well, do you want to go stocks or do you want to go dollars? If that's the case, if the dollar was a safe haven, that means you could take a bunch of money, throw it under your mattress, or put it in some sort of chest or some sort of shoebox and bury it in the ground. And when you go and get it in a few decades from now, everything is going to be fine and you have made a great investment. Well, it's never ever been a good investment to hold on to paper dollars because they have continuously lost its value. And that's why when I talk about steps as far as getting out of the dollar, when you hear Ben Bernanke talking about an exit strategy, well, I think it's important for people themselves to have their own particular exit strategies for what they have. I mean, the stock market, people say, well, we're going from the stocks to a safe haven of dollars. And in reality, it's the same thing. If you are investing in stocks, you are investing in dollars. The only difference is you are playing a casino roulette kind of game in the hopes that your dollar number goes higher, and because it's a casino game, it could very easily go lower. I can't put $1,000 on an Alcoa share, or 1,000 ounces of silver, in an Alcoa share, in the hopes that it goes up 20% and then receive back 1,200 ounces back. No, you can't do that. You can only buy stocks in the form of dollars. And that's why I've talked a lot about gold and silver as far as safer, longer term assets. And I received a question recently from a user on places on where to buy silver. I don't buy my silver on the internet other than the odd time on eBay. And it's so odd that I have to get my price right with the shipping. And then I'm finding out how much sellers are getting nailed with commission fees. I don't really want to do that much anymore. Nonetheless, if you go on eBay, you normally are going to spend a heck of a lot more, but there are occasions where you can get good deals. And you got atmex.com. I have never bought from them, but I have heard great things from them. You have places like Kitco, you can get silver. And the person was even mentioning about shorting silver when you buy it, which is actually a pretty good strategy. If you buy a bunch of physical silver and then you short the silver, what you are doing is you are hedging your play with silver over the short-term time frame. If silver plummets or tanks, then what you're able to do is cover your short or sell your ETF, which gives you a extra return, and maybe you can even buy some more silver at those prices. If you are a holder of silver and you have these nice rallies, after a rally gets to a certain period, maybe you want to say, you know, I'm going to short some silver. If it just keeps skyrocketing the upside, your short is going to lose, but you know what? That's why I like those ETFs. One of them is ZSL, which is Zebra Short Library. That is the double short ETF for silver. If you see silver going down, then you're going to profit on that. And if silver skyrockets, then guess what? Your ETF is done, but your silver fund, as far as real silver is going to work out. Maybe you put a smaller portion on the ETF, maybe a quarter, a fifth, or a sixth of what you are normally putting on silver, depending on what you want to do for risk and reward. Now, what is a safe haven? What would be a safe haven? If dollars are not a safe haven, they might be safer than bonds, and obviously bonds, again, that's still dollars, but what is a safe haven? And that's different for everybody. What I don't think is different for everybody is stuff like food. I mean, everybody needs to have food. Maybe you might want to have different kinds of food, but investing in food is a safe haven. It's pretty much a guarantee, because if this whole wild accusations of the dollar not collapsing is true, well, you're still going to have food that you are planning on eating, and if you're financially well off, even though you buy it, maybe you can donate it later on to Red Cross or a United Way type of an organization. Clothing, energy, supplies, equipment that you are actually going to use, that is a safe haven. And I still believe that a bunch of silver is a safe haven as far as a basket of different assets. I like silver for the short and long-term time frame, mainly short. Heck, you want to buy some food in another year from now, 2 years from now. You're not going to be buying milk today for 2 years. Yeah, that would be crazy. Or any fresh food. That's what it is good for. Maybe there's some supplies or equipment that you don't realize you're going to need in 2011, 2012. That's why it's considered to be a safe haven. And what this channel that I wanted to do, it's all about giving you information that I see as part of reality. That's why when I talk about how our currency is created of debt and whatnot, it's recommended, at least I would recommend, that you look through all of the different sources that you're going through. My channel, so many other great channels on here, so many great web pages, and even the mainstream media that you are hearing. And then go through what everybody has to say, and then it's all about making your own decisions for what it is that you are looking to try to get from this. And every action in this world contains a reaction. So the action from creating fiat dollars, fiat meaning money that is not backed by anything, the action from that out of thin air is going to cause what reaction? I'm not going to answer it. I'll let you try to figure it out. But what can I say? I guess if you throw in the interest, the action from charging excess interest causes what reaction? We're seeing it now with all this massive debt, the foreclosures going up a lot higher, and so many people on the middle class going lower. That seems to be the reaction from that action. And let's just take a look at a house. When you buy a house, you're going to get a mortgage, you're going to have to pay it off over 10, 20, or 30 years or whatnot. And if it's a $200,000 house, you could easily be spending $100,000 interest. But we'll make a lower number, we'll say $50,000. Okay, let's just say for every 1 million people that spent $50,000 interest on a house, that would increase it to $50 billion in interest revenue for the banks, which would be $50 billion in interest expense for us individuals. And then you throw in the fact that it most likely would be higher than an average of 50,000, and there's well more than a million people in the United States that have these kinds of loans, that the debt ceiling continues to raise higher and higher. The credit cards, same sort of deal. It keeps going higher and higher. On a accounting point of view, what happens when you have debt or interest is the financial institutions will have an account which is called accounts receivable. This is money that people owe them. This is loans, and that means if the interest, say, is $20 million over a period of time, their accounts receivable will go up 20 million, and from their revenue statement or their income statement, they will put that same figure in as interest revenue, which means that our accounting funds would go as far as a debit or a interest expense going to that level and accounts payable. Basically what this means is it is guaranteed to have massive surpluses in debt because it's pretty much a way of creating money out of thin air, yet the money doesn't get created, and thus it creates such excessive amount of debts. And I'm still baffled by how many people don't understand this information. You're hearing a lot on the mainstream media talking about, oh man, we got all of these Greece concerns. The Greek have all of this major debt, but you know what? The Europeans today decided that it looks like they're going to bail them out. I guess they're going to print more money, and in reality what that is doing is it is creating more debt. We are hearing how Mr. Ben Bernanke is at some point going to have to raise the interest rates. Right now they're at like a quarter point or 0.25%. You may say that is low, and that's not going to make the debt go up too much. And no, it still will. That means more money will be lent out, and sure, the debt percentage may not be as high, but it is still there. There is no such thing as a low interest rate unless the interest rate is 0%, at least from my point of view. And yeah, I guess that would be the video. So remember, it's all about seeing what everything means to you, because if you pay, I'm hungry. If you pay debt and you get it paid off, what that means is that amount of debt that you have somebody else is just going to pick up themselves. Thank you everybody for watching, and have yourself a magnificent day. Bye-bye.